Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. What's today? The week has been so crazy for me. I believe it's Tuesday. So happy Tuesday. You're here with me. I'm going to go over, actually before I get into our general recap, let me welcome you. If this is your very first time tuning into a ShortMeTina video, I'd like to say welcome. Do us a solid in the comment section. Drop us a comment. Say hello. I generally say hi back. If you're returning, I want to say welcome back. I know you can be doing a lot of other things, but right now, in this second, in this moment, you're here with me listening to these recaps, listening to me talk, and for that, I am truly grateful for. So yesterday, I wasn't around my microphone, so I kind of had to record our recap in a, let's just say, in a non-conventional way without a microphone. So the audio might have been a little bit off. I tried my best to ensure that it wasn't too low. I'm not quite sure how you received that. So I'm going to go over today most of the things that I talked about yesterday in the event that, again, they weren't quite clear in the video that I did yesterday. At any rate, so we're going to start off with, and I'm going to try to keep it relatively simple. I think I've been repeating the same thing over and over again, and I'm very much so okay with that because I don't know about you, but how I learn is really through repetition. So again, I have no problems repeating, generally speaking, the same things over and over again, or saying the same thing stated differently. So we're going to start out with the S&P 500, the SPY daily chart. This chart goes back to around 2017. We're off about 0.44% on the day. The day started, in my opinion, I think it started a bit on the strong note, and towards midday, I want to say around maybe 1 o'clock, the market started to pull back, and we had like little bounces here or there. Eventually closed at 286.73, so we're down on the day, right? However, we are still within that range, right? 281.72, pretty precise, the lower end of the range. The upper end of that range is 294.15. So no matter what has gone on for the past few weeks, right? The Dow is up 700%. The Dow loses 800 to 1,000%. We're talking about the SPY now, so let's do it in terms of percentage. The SPY is up 3%. The next day we're down 3%. Then we're up 3%. So with all that sort of like yo-yoing in price action, we've still managed to remain within that range, or within this highlighted box, since Fed J. Powell again issued rate cuts. That's when we had, we were trending higher. We broke through this 293 to 295 resistance level. Again, we trended higher, went as high as around 302. Rates came out, we pulled back. Since that pullback, right, and since things have intensified between President Trump and President Xi, we have still remained within this range. And so for me, and full disclosure, I am short the market. I shorted it a while back before all of this craziness happened. So to our luck, right, we shorted relatively close to the top. We shorted relatively close to the high. So when we got to around 281, I remember the first pullback, SPY was at 277, and after hours, I was like, whoa, this is the quickest 10 or so percent I've ever gotten, shorting the markets in such a short period of time. At any rate, I'm not quite sure why I said that story. I guess just for filler. So despite all of that's been going on, we've still managed to remain within the range. And so for me, like when the president tweets that, okay, trade talks are moving along better, and then the market spikes up, do you think that I run to my desktop and I close my short position? Absolutely not. My trading plan was structured before I got into the trade. So these little ups and downs don't really do much for me. And especially being that we have not violated this range that we've been trading within. Now, if we break through that 294.15 level to the upside on confirming volume, and we sustain that break, then things get a little bit interesting. Then I start to look at my short position. Then I perhaps start to envision different scenarios in my exit plan, right? Or I might adjust it because I already have my exit plan. if we dip below that 281.72, then things are, things are going in my favor, and I'm going to want to, at that point, perhaps kind of take some profits and then roll it in to make my short position a little bit bigger so I can maximize as much as possible out of this short trade. Now, it's not really here, this assessment or recap rather, is not here necessarily to talk about my trading plan or, my trading plan in terms of being short the SPY, although I'm going to at some point write a blog about it, essentially like my thinking, and if I ended up rolling in or exiting, like how I actually maneuvered that, I'll let you folks know. But the point of this video, and it's getting kind of long, so I'm going to speed it up. The point of this SPY recap is that, unless you're trading this volatility, unless like you're a scalper or a day trader, then yes, you've gotten like a lot of, for lack of a better way of framing it, you have a lot of material, right? You've been able to trade in and out. You've been presented with a lot of opportunities. But if you're someone like myself that, generally holds positions for a few weeks, months, swing to a position trader, I'm not getting scared out of my trade unless this range is violated. And so, I would suggest if things are the ups and downs in the market has made you a bit sort of on the crazy side or it's driving you insane, you can step away from your computer or not pay attention until one of these ranges are violated, okay? So again, we close at around 286. Heading into tomorrow, the remainder of the week, obviously I'm going to be paying attention to the lower end of that range, which is 281.72. And I'm also going to be paying attention to today's low, because if we breach today's low, I'm pretty sure we're probably going to revisit the lower end of that range soon. So that's sort of my thinking with the SPY. What else? All right, and then we have the IWM daily chart off a little bit more than the SPY, right? We're off about 1.5% with the IWM, closer at 144.76. Now, I spent so much time talking about the SPY, that means that I'm spending less time talking about the other stocks or ETFs that I analyze. So this is a daily chart dating back to around 2017. Like I explained in the video that I did yesterday, the arrows essentially denotes the times in which the IWM actually bounced off of support. So again, this is a chart dating back to about, let's say a little over 2 years, and I've highlighted the times the IWM has actually bounced off of support. So for me, that's a strong level of support. The black arrows essentially are the times in which resistance actually served as resistance, and that level is around 160. So I think equally we've had the IWM test that 160 that 160 area about 6 times. Let's counting 1, 2, 3, 4, 5, 6, and we've also tested support around 6 times as well. 1, 2, 3, 4, 5, 6. Now sitting here at 144.83, we're kind of within that 145 that 144 to 145 support area. Now heading into tomorrow, very crucial because the selling has been on volume. Look at the volume here, selling on volume, here. So this might be complete unloading right now in the small caps. But anyway, so heading into tomorrow, I'm going to be paying attention once again to that 144 level. If history is anything, right? If history says anything, the likelihood of us getting a bounce should be there, right? Because we bounced here. The only time we really violated that range or that channel was in December when we had this all-out crash. It started back in October, right? And we eventually bottomed out in December. But the only time that 144, 145 level did not hold was within this highlighted area here. Okay, so heading into tomorrow, again, if history is an indicator, there's a chance we'll get that bounce because it's happened around 6 or 7 times before. But we have to also know there was that one time here in which we didn't get that bounce. So that's what I'm going to be paying attention to heading into tomorrow with the IWM. What else? All right, and so let's go over gold. The ETF ticker GLD daily chart. It's up about close to 1% on the day. I see a quote here of 145.52. So again, I did a video on gold yesterday saying, well, you know what? If you're looking for a trade or your portfolio is long and you're looking to hedge, right? So one of the ways that I'm hedging is by shorting the market. I have my long stocks, but I said, you know what? If the market tanks, I at least want to make some money on the way down. And that's what's been happening for the past few weeks. Now, there's another way in which you can hedge if you don't want to short. You can actually long gold, because generally speaking, and you can see it here, right? the gold has actually been going up since around September of last year. So for about a year, gold has been trending up. And if you notice on the days that the market contracts and it pulls, right, it declines, you'll see gold prices go up. So you can hedge by actually going long gold. In the video that I did yesterday, and I don't have any position in gold, by the way, the video that I did yesterday essentially said, well, getting in around 144 was not necessarily the worst price point, because you can see that it's actually breaking out here of a 6-year chart. So this is a daily chart going back to 2013. So you can see it's actually breaking out here of that 144 level. So yesterday I said, well, technically speaking, it's not the worst place to go long. So if you went long, you made a little bit of money today. I didn't go long because I usually like to put things extremely in my favor. So to reiterate, with gold, you can use this as a hedge. You can go long gold if you're not liking what you're seeing in your portfolio with the markets contracting and pulling back. So sitting here at 145.52 again, a little bit too rich for me, but it might not be for you. Where do I see gold running into resistance? Around that 150 level. So things look very interesting here for gold, and I'll talk about another way in which you can hedge right now. All right, and then we have silver, ticker SLV. Daily chart is up about 3%. So silver is actually faring a lot better than gold. So yesterday I talked about another way you can hedge, right? You can hedge by going long silver. And you can see here, now this is a daily chart dating back to 2009, so about 10 years worth of data. But I really want to focus in on price action similar to gold starting around 2013. So for the last 6 or so years. You can see on the shorter term, right? For the year, you can see that gold actually, I keep saying gold, silver actually broke through this resistance level here of around 15, and it's been trending up really since May of 2019. So really strong move from a low of around $13 in May. And you can probably barely see this, but it just looks better when I look at charts this way. I can see a picture when I kind of condense it versus expanding it. Anyway, that's just me visually. So you can see here it broke out of a really short-term base of around 16, closed at 1703, and you can see it running into a bit more longer-term resistance of around, let's say, $18. So sitting here at 17, silver still has a way to go. So you might want to put this on your radar, because I'm actually looking to jump into both silver and gold, not at these price points, but the trade seems to be setting up, and I'm liking it right now. What else? All right, let's roll along. Then we have ticker NVTR, daily chart dating back to May of 2019. So it's a shorter term chart, up about 46% on the day. So huge congrats to the bulls. I believe it's down a little bit in after hours, a few percentage points, but we closed at 209 on confirming volume. So that's good. Now for me, I don't like these types of charts. Why? Because you'd be trading against a trend if you go long, and I don't believe in shorting stocks that are this low priced. So again, daily chart up about 46%, but I wouldn't want to long this because, again, stock has been in a downtrend since May of 2000. And actually, if you go all the way back, the stock has been in a downtrend since it probably IPO'd, right? And it's sitting here at 52-week lows. Well, not today, but most recently it was at 52-week lows just a few days ago, right? When it was at a low of around, let's say, $1.30. So for me, not the type of stock that I like to go long, but it is showing some signs of life. Look at the volume here. It's up about 46%. So there might be a trade on the long side. For me, if I was to look to go long, which I won't, well, it depends. I'd be paying attention to the high today of around $2.34. If it cannot get above that and sustain that, then chances are you might actually get a fair shot at around hitting $3. So that's my take on ticker NVTR. What else? All right, so let's wrap it up and round it out with ticker KOSS, daily chart up north of 30% on the day. So huge congrats to the bulls. I see a quote here, a close of $2.65. Today's high was $2.90. You can see we ran right into resistance with that high of $2.90 to then pull back to close at $2.65 on relatively decent volume. So if you're asking yourself whether you should actually jump into this trade, or if you should actually let go of the profits that you have, I'll just give you some numbers to pay attention to, and then you can, I'll give you some numbers to pay attention to, and you more or less can decide whether or not you want to enter this trade and exit this trade, etc. So for me, if I was in this trade, what I would be paying attention to obviously would be the close. We closed at 265 today. I would be monitoring what's going on in after hours and pre-market. If we open up below the close of 265, for me, that would not be a good sign. And if we cannot get back over that 265 level within the day, then for me, that is a very bearish signal. Obviously, you also want to be paying attention to the low of today, which is 205. And if we take that out, I think that it's story over for ticker KOSS. So that's kind of my take. So again, up about 30%, but heading into tomorrow, I'd be paying attention to that 265 level. Super important to actually open up above that and to sustain that. All right. So that's kind of it. Tina here once again from ShortMeTina.com. I hope this video was a lot clearer than it was yesterday. Anyway, if you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. Are you in ticker KOSS? What about ticker NVTR? Are you looking to get into silver or gold as a hedge? How are you hedging in the market? What are your thoughts on the SPY or the IWM? Do you think we're going to sell off some more? Or do you think we're going to rally on higher before 2019 is out? That's the first thing. Comment in the comment section. 2, make sure you are subscribed to our YouTube channel at ShortMeTina. This is how I actually get the word out. This is how people find out about us, by you hitting the thumbs up button, liking this video, and subscribing. So if you're not subscribed, ensure to do that. And lastly, I've been trading for well over 15 years. If you want to learn more things like what I'm talking about now, other technical stuff, some tips and tricks that I've learned after trading for over 15 years, then definitely head on over to ShortMeTina.com, sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll talk to you tomorrow.